Hi, everybody. It's good to be back. Let's have a great week. Brock, Kevin, how are you? Shahab, everyone doing okay? So a lot of people asked, what was going on with me, and I just went to get a haircut. I needed 3 days to make it up to Rodeo Drive in Beverly Hills to get my haircut. So all's good now. I know you can't tell. Anyway, it's great to be back in the saddle, everybody. There's some interesting action today. I know our crew is going to help you this week with their educated eyes. And here's just every day a bit better. Alexander, thank you very much. So let's get to it, and let's get me out. Let's get me out of here. All right. So I came in Saturday looking at this formation, ascending triangle. So my bias actually was to the upside because ascending means, a reversal formation to the upside. Ascending triangles are bullish normally, although, it can go either way. This could have been like a flag. We're getting a breakdown. Thank you, Amira. So we're getting a breakdown. I didn't get long euro or anything, but EG is working. So again, euro's your preferred long over cable. And there's euro has like a little bit of a neckline here at 113.40. All for a few weeks, euro has really done nothing negative. Sideways, sideways, sideways. When you look at this, and this line right here may end up being a bull flag, which measures, well above this high. So dollar under pressure equals risk on. One thing I will say about the S&Ps here that we didn't do Friday, and I didn't notice till I was talking to some people Saturday, is that even with this high Friday and all the strength in NASDAQ, we still had not taken out the high from June 20th, right around the solstice, and they finally did. It was, I believe, the high there was 68. So we're doing it now. And actually, I'm going to be looking for maybe a turnaround Tuesday short here. Of course, it's not going to be doing anything wrong, but until we, at first start taking out 3,100, but 3,150 should show you see here at new highs. We're not confirming. It's a 1 millionth divergence here. Gold had a nice little break last week. I saw it from the hospital bed right up here. And because I wasn't able to trade it, the gold market, I believe it's going to give me another chance for 3 drive up around 1790 or so this week. And if it can't do it now with a weak dollar, it never will. So this is a time for it to accelerate. Silver outperforming so far today by quite a bit. We'll see if we could take out this 1840 level, trade 1850 in the next few days with a weak dollar. And with all of this going on, who really is the weak sister today? It's WTI. So you have S&Ps up 51 handles, and I drew this line Saturday right here off these two highs, and so far it's respecting it. But a day like this with S&Ps up 50 handles for WTI to be up 35 cents is not impressive. So this too would be a short candidate for me. Could it take out the highs from the week before at 41.60? Possible, but this would be a pretty good market tell if WTI cannot take out the high, the move made. Again, this is June 20th. A lot happened on June 20th around the solstice and the eclipse. A buddy of mine told me there's a comet out there now. So that is going to pass wisdom on to the human race. So maybe I'll start trading even better. So again, keep an eye on the gold, because something I've been pointing out It's going to be very interesting to see what Newmont does, because when you see Newmont here, it still hasn't even retraced 61.8. And that's with gold making the physical market making new highs, several new highs in the past few days. So maybe Newmont could get back to here. And if we have a blowout to like 1820, maybe 1786, we'll see. I think we're going to know this week on that. I'm not sure if there's anything else I really want to cover. Let the rest of the team do it. But yeah, I think that's about it. Silver TLT. Yeah. So that's it. Great to be back. As far as energy is concerned, we have Shy Girl with us. Tracy will be with us at the top of the hour. Thank you, Brock. And yeah, Tracy actually called the bottom in the dollar at that 95.60 level. And I know she's a long-term Euro bear, so it's going to be interesting to talk to her about this and also what she's seen in the energy patch. So how are you, Blake? Good to be back in the saddle, buddy. Thanks for covering for me last week.
Hey,
Hey.
can you hear me?
Yeah, got you,
Hey,
buddy.
what's going on, Coach? Good to have you back.
Yeah, it's good to be back. Yes, I prefer this to watching Bloomberg in the hospital.
I'm just avoiding the hospital.
Yeah.
Is just I think
Yeah.
it's a good thing. So it's nice to have you back, and I would say you didn't miss a whole lot. I mean, there wasn't like if you look at the euro last week, we just spent the whole week consolidating, and
Yeah.
But today we're trying to break higher. I mean,
Right.
and that's the thing that we need to be aware of. Is you can see that the euro dollar is trying to break out of, this is the bull flag pattern.
Yeah.
So, we got to be respectful of that. I want to see, obviously the euro's popping. As soon as New York stepped in, they started buying up euros or selling dollars. But seeing how we react going into the open today, seeing what's going to happen here is going to be interesting, because it's not just, you can see the euro's trying to, this is trying to base, right? Which in my opinion looks pretty bullish. I mean, here's your daily chart, right, in the euro. But I look around at some other currencies too, Dale, and I'm a little concerned, because if you look at like the Aussie, for example, the Aussie dollar, we tried to push up against resistance here and we're showing failure, right? Kiwi, this is a multi-year trend line. And I know I tweeted the chart today, but we, are just probing this multi-year trend line, kind of struggling with it. Dollar Canadian, for all intents and purposes, the dollar Canadian has not really sold off. I mean, it's holding up relatively well.
It's all euro, buddy.
What's that?
It's pretty much all euro. That's
right now. It is really the euro that's the euro and there's some other pairs out there too. I mean, if you look at the weakness in like the dollar Swiss, but really it's mostly just the euro dollar. You're right, and it's not saying that it won't bleed into other currencies, but if you look around, just look at all the currencies that are on my on the right hand side here, and it's mostly the euro that is moving at the moment. The Norwegian krona is down a little bit, but in all actuality, it is the euro. We do have the U.S. dollar, Mexican peso. Some of these emerging market currencies are a little under pressure, but like I said, it's if you're out there just selling dollars across the board, you're probably going, okay, I see that the euro is moving. And by the way, the euro is, it is really trying to make its move here. And what we'll do, let me just do this really quick. Probably, well, first of all, we are above like the 78% retracement, almost the 88% retracement, which will come in at 113.30 here, with the euro. But I think if we go like this, okay, so here's the top of that, here's the bottom of that. You know, we're back at the 618 retracement just like right now. So, you know, is it, you know, could the euro stall right at these levels? Sure, but what I'd really be more interested in right now is to see on a dip, if the euro dollar dips back towards 113, how does the euro dollar act on a dip back towards 113? You know what I mean? That I think is going to be key today. It's hard for me to chase the euro right at these levels, but I do think that you know, if we do dip, I want to see, you know, try to buy it on a dip and see how it reacts there. And you can see the euro really acting well against other currencies too. I mean, you got the euro. Here's the euro pound. Euro pounds, you know, strengthening. Euro Aussies coming off of the lows. Euro New Zealand came off some support here. So really, a lot of euro crosses are also looking pretty decent right now. Dale, you're pointing out gold. Not sure if he's around, but he was pointing out gold a little earlier, and I have to say that, you know, something that I mentioned on the week ahead video. You had to listen.
I'm here, Blake.
Yeah, okay. Go ahead. Yeah, you had to listen towards the end of the week ahead video, but you know, I was just mentioning how gold. I mean, it's holding up really well. You know, how many people are trying to sell gold right now, short gold, because you know it's not going higher, so it's just, you know, it's sitting up near its highs, and you know, how many people are just trying to fade gold right now, thinking that positioning's, you know, too much and yada yada yada. But I'll tell you what, gold's you know, gold's holding up there.
You have a measured move up there, Blake? Like
what
do you have a measured move? Do you have a measured move for a target at new highs or something?
You know, I don't, other than, you know, we have this, I guess the 161% extension of this move would, you know, take us to 1860. Okay. I mean, you know, it's really, you know, I can't say that, oh, well, you know what we should do. Let's take this and let's put in the 88% retracement. It comes in at 1823. I mean, it just seems to me that
could do that.
That it could do that because it's just not, like I said, it's just not pulling back. And you know, as I pointed out in the week ahead video, you know, as long as we're staying above the 1760, this like pink line right here, I don't think there's any reason to be on the short side of of gold. You know, we start breaking back through some of this support, you know, some of these lows here from last week, then you know, you start getting a little concerned. But for right now, I mean, it's holding up pretty well, and I don't see any reason to be a seller of gold. And you know, I keep going back to the argument that I had from you know, for the last several weeks or months, we've been, you know, talking about this is, you know, as the Fed has, you know, induced the market with so much liquidity, that it's the same actions that they took during the, you know, great financial crisis. And, you know, as you plow that much liquidity in the market, if you look back at, you know, 2008, 2009, 2010 in gold, those were, you know, times where the market just took off and gold just rallied so substantially because of all the liquidity, excess liquidity that central banks have added, you know, to the system. And that same thing's happening right now. So, you know, what's to say that gold cannot trade towards $2,400-$2,500 in the next, you know, year or two? I think it's entirely possible, right?
Yep.
And if you think about it, you know, if you think about 2000, you know, those years, 2009, 2010, I mean, look at what the Aussie did, you know, look at what the Euro did, you know, the Euro, well, I mean, the Euro actually, you know, just kind of been meandering around. I think Europe had its own problems at that time, but a lot of these commodity currencies, you know, look at the Kiwi, you know, the Kiwi ripped from let's just say, post financial crisis, we were at the 50 some cent range all the way up to the 80 some cent range. So why can't that happen again with these commodity currencies? Why can't they break out and break higher, right?
Yeah.
So, I don't know. I think the risk is here that we start to see, some of these big, some of these moves really start to take place. Whether you're talking about, the Aussie, the Kiwi, the Euro. I mean, everything just looks like it's gonna go. I mean, the Aussie looks like it's gonna break higher too. So, I think things are, looking more and more like that. We're going to see dollar weakness. Oh, look at gold just hit new highs as we are speaking. I mean, what's going to stop these, the dollar continuing to weaken and, these commodity currencies to break out? One of the commodity currencies that I think we should be watching pretty carefully here is going to be the dollar Canadian, because the dollar Canadian hasn't really, it's weakened, but it hasn't really, started to weaken substantially. And I think that a move below the 200-day moving average, which would be the lows of the session, that would probably, accelerate some losses with the the Canadian dollar. I mean, look at that 200-day moving average. We break through that, and I think we will trade, lower in this particular pair. So I think that's something that that we should be paying attention to, right? So anyway, just some things that I'm looking at this morning. The dollar Mexican peso continues to be pretty weak here. Oh, this is one of those things that I was looking at. Speaking of measured move, Dale, AB equals CD. I mean, you're talking about the dollar Mexican peso heading down towards 19 again. And that would be realistic after only a 38% retracement. I mean, that seems pretty, pretty doable. So, anyway,
right back to where it started.
What's that?
Right back to where it started in the spring.
Yeah,
like
exactly.
A lot of things, that would take it right back to, like the COVID crash never happened.
Yeah. I mean, for sure. And I look around, Dale, and it just, with the way that stocks are acting, and by the way, the equity markets, I mean, you look at stocks, we're, we're trying to break higher, break out territory. Here's the NASDAQ. That was my NASDAQ chart from the chart of the day, actually, on Thursday. But I made it real simple. While you're above here, you're bullish.
Right.
That's it. It's just, it is what it is.
Like your bull bear line on that.
Yeah, I mean, it's all. We're in breakout territory. So why fight it? Just let it continue to play out, and eventually we're gonna see things catch up with the market. But right now, I mean, as the market continues to break out, why fight it? So, I look at currencies like, here's the Kiwi dollar. We're probing this multi-year trend line. I actually think it's going to break out. And if you think about like a breakout above 65, what is this? 65.88. Well, let's just call it 66 cents. That's a major breakout for the Kiwi. And you take the Kiwi and the Aussie. They're not going down, right? It's kind of like the whole adage with gold. If it's not going to go down, there's only one other direction for it to go. If the Aussie and the Kiwi are not going down, there's only one other direction for these currencies to go. So anyway, I think they've rejected some pretty big resistance levels. Like, I was pointing out on Twitter today, if you look at the Kiwi, this is a multi-year trend line. Well, what if it breaks the multi-year trend line? Where does that put the Kiwi dollar? I would assume that puts the Kiwi dollar somewhere up in these levels if we do break out, whether it's 69 cents, 70 cents, who knows, but I think you gotta consider these are, it's the dollar weakness is pretty real at this point, right? So anyway, just some food for thought on how I'm feeling here, and I'm like I said, I'm really looking at some of these commodity currencies, and the one thing that's going to get me more excited about them, like the Aussie dollar breaking out per se, would be watching the U.S. dollar Canadian. If the U.S. dollar Canadian can really start to show some weakness, I think that'll just add fuel to the fire to some of these commodity currencies, in my opinion. So again, they're just I think that there's just things that we should be paying close attention to. The euro dollar definitely looks bullish, at least at this moment, but obviously we're going to have to see a breakout above the 114 and change for it to become really, really bullish. But it is, it's building some momentum here, and I don't know if I'd really want to stand in the way of it. What I will prefer to do, especially with like the euro, and is looking for dips to buy today. So if I can get a dip back down towards 113, I'll find that more attractive to be a buyer down there. But who knows if we're going to get it? Who knows if we're going to get those types of pullbacks? Look at the U.S. dollar, Norwegian krone. This is something that we should also be looking at as well. I mean, we've given back all of these gains, and we're below the 200-day moving average. And the fact of the matter is, we start breaking below 9. I mean, the U.S. dollar, Norwegian krone could completely reverse. And if you look at longer term, this is one of those, squeezed everybody, the entire market out, and then, reversing hard. It could be quite a massive reversal. And I just think that the dollar just continues to look, pretty vulnerable at this point. So, but I'd like to get actually Steve and Stelios' opinion here, and I'm going to bring Steve in because Steve was in the chat room today, talking about the euro and about the the strength of the euro dollar. What's up, Steve?
Good morning, mate. Good morning, everybody.
How you doing?
Good. How have you been?
Good. Is Stelios here this morning?
Nope. Good morning.
No, he isn't.
Good morning.
Hey, Stel, are you back in town now?
I'm back in town, yeah.
Awesome. Well, welcome home. Steve, you were in the chat room a little earlier today, and you were talking about how bullish the euro looks. How do you feel about the euro and what it's doing here at these levels?
Great to hear all of you guys.
Good to be here, man.
Hey, Coach. Nice to have you again with
Steve.
us.
Oh, Steve's here. Okay, I'm going to take that break now, Blake. It was good to hear. Blake, good to hear you, Blake. No, I'm kidding you, Steve. I'll be back in a couple.
So I think nothing has changed since we got the date on Thursday. We said back then after the data that the most likely scenario is that that's going to be a catalyst to actually get another leg lower for the dollar and probably another leg higher for risk assets, because of course those two more or less go hand in hand. Thursday, perhaps due to the 3 days that we had ahead, we didn't see that much of a movement. And then mentioning the fact that we had like a 3-day weekend, because you know how things have been lately. I mean, lately within 3 days, who knows what can happen, what kind of news you can get, what kind of a catalyst you might have. So I'm not blaming people for not wanting to jump on positions ahead of 3 days that you won't be able to do something about them. But since the weekend was quite uneventful, it's more than obvious that they want to jump on the saddle now and ride this move. Now we're going to see how long it's going to last, but it seems to be happening.
Hello,
Blake?
did we just lose Steve?
No, I'm here.
Oh, okay. Oh, I thought we lost you there for a second. Yeah.
Yeah.
So, yeah. So again, I'm looking at the dollar here, and the dollar just looks like it's going to be getting abused. And Stelios, we have your precious metals that are stronger today. Gold that's trying to break out. What do you make of all this this dollar weakness that we're seeing?
Well, I think it's all risk on, dollar down, end of story. And we've said this for days and weeks. So it continues. The world continues to think that, rightly or wrongly, that things are going to be back to normal. And equities rally, the dollar crashes, sells off, and metals rally, which makes sense. You know me, I'm a bull in metals. I have been, and I've been riding it for a while. I think we will get a correction because DSI and positioning is getting quite bullish now. But in my opinion, any kind of decent correction is a buy. No doubt about it in my mind. So yeah.
I'm not, necessarily convinced that we're going to get a very decent one, Stelio. I mean, we've seen periods of time in the past that gold moved for a substantial period of time, in a one-way street, in essence. I mean, just, think about it. Since 2001, for example, gold moved all the way to 2006 before seeing, a first decent correction. Then, after this correction was over, we rallied again from the end of 2006 to 2008 without any decent correction, so on and so forth. So, I don't know. I mean, we're going to get pullbacks, but are they going to be enough for people to consider them, buying opportunities? Not necessarily under this environment.
Yeah, I agree. I hope we get a good dip, but I'm not sure we'll get it. I think the scenario where we will get a good dip is, like I've said before, if equities have a proper leg lower and there's a little bit of panic, then I think we'll see gold and silver get smashed a little bit, just like they did in March.
Yeah, well, we'll see if that is even possible right now. I'd have to mention that seasonality as we know it is kind of thrown out the window this year, obviously because of the pandemic and the work patterns of most of Wall Street or the financial industry right now. Everybody's just kind of in front of their computers, whether at home or in different parts of the country, or in different parts of the world, excuse me. So we can't rely on the normal seasonal patterns. So as of right now, equity markets still look bullish, and it still looks like that we're recovering. We're just not very far off of the highs here. I mean, look at the S&P. The S&P is in breakout territory right now, and the pullbacks are very minor at this point. You can see this breakout is still holding on an hourly basis. So, well, guys, we have today. I think let me just take a look really quick. Whoops, let's go over to our calendar. Today we have some Canadian data. We have also ISM coming out a little bit later. So, maybe some things that might move the needle, especially with the dollar Canadian. I'm really, kind of scratching my head here with the dollar Canadian holding up as well as it is. But as I mentioned during the week ahead video as well, if the dollar does turn and we start to see some dollar buying, this is the one currency pair that I will be looking at because it has been holding up better than, a lot of these other, commodity currencies and whatnot. So anyway, I'm going to pass it over to you two gentlemen. Stelios, welcome home. Dale, really good to have you back. Steve, it's always great to hear Steve's voice. So,
Is it?
and well, what a jerk. Anyway, for those of you that haven't tried out ForexAnalytix, make sure you do. It's only $1 for 10 days to try us out, and then also visit our webinar sponsor, which is going to be Forest Park FX, because they will help you find a broker that's best suited for your needs. So make sure you visit with them, and you can get to them on the reimbursement page through on forexanalytix.com. So Steve, Stelios, I'm going to pass it over to you guys and Dale.
Hey, Blake.
And yeah, and good luck this week, everybody. I'll see you on the daily roundup in about 4 hours.
Thank you, mate.
Thank you, Blake.
Great to hear you again, Blake.
Bye-bye, mate.
Okay,
hear
I'm
you.
back to hear Steve and and Stelios.
Yeah. So our friend
Hey,
Sam
Dale.
is asking.
Hey.
Our friend Sam is asking, could second quarter earnings drop equities? Theoretically, they should, but if earnings made any difference nowadays, Tesla wouldn't be at 1,200 or wherever they are. So I think markets are a little bit crazy at the moment. People are trying to front run the Fed because we know the Fed's buying everything.
Literally everything from corporate bonds to
yeah. And I was watching a video. Somebody from the chat room posted the video of a guy explaining, what the Fed does, how they buy stuff and everything. And apparently, they're buying corporate bonds from certain companies, including Apple. Which
Apple really needs some help.
Well, it just.
I mean,
makes
they
no
only
sense.
have like 100 billion of liquid assets. We should really help them out.
Yeah, I think the cash, they're sitting on like 60 billion of cash or something like that. But anyway, it makes sense.
50 billion of cash and another 50 billion of stock.
There you go. Okay. But it's. I understand people saying, look, the Fed is here. They've got our back. They're going to buy everything. So with all this liquidity, you get ahead of them and forget about it. Just open your eyes in 10 years' time. You're probably going to be doing okay. But then on the other hand, you read. I was reading the WHO. They said that we had the highest one-day increase in infections since the beginning. So, Iran and Pakistan and Indonesia and countries like that are reporting huge days of infections. So that scares me. And, for me, if we get new highs in the S&P, or if we get new all-time highs, that will probably put things so, how should I say it, so at such an extreme in terms of positioning and sentiment, because people say, look, equities are never falling ever again, end of story. And that's when they're going to start falling, in my opinion. So
valuations are already like the second highest we ever had in history, with the only highest reading being in what everybody accepts as, probably the biggest financial bubble of recent times, right?
Yeah, the tech bubble, right? Yeah,
exactly.
Absolutely. And our friend Sean is saying, Ray Dalio said the stock market is no longer a free market. Unfortunately, I agree. Price discovery is not there anymore.
Unfortunately, it's not only the stock market that's no longer a market, right?
Yeah, they're influencing everything. So, to front run the Fed makes sense. I still think we'll see a leg lower eventually, but I have no equity positions, and I'm sitting here feeling pretty silly. But on the other hand, I'm long silver, I'm long the Norwegian krone, which trade with risk. So I'm happy with those. But I am looking to buy equities, but not here. So, if we get the drop, we get it. If not, I will reconsider. I've been wrong in the past. I might be wrong again. So, for me, it's the whole situation with the virus. The market's basically discounting that everything's going to be back to normal. Everything's fine. Yes, you get the odd problem with unemployment being higher, but this is only short term, and we're going to go back to normal. And there will be a vaccine at some point, and then we'll forget about it. I hope it turns out this way. I really do. But for the moment, I'm not convinced. What else is happening? Chinese equities smashing day to day, up 5% or something like that. So best day in years from what I read. And
did you say about Chinese equities, Stelio?
Yeah.
Yeah, I was looking at the chart early in the morning. Actually, Chinese equities have gained, let me find them, have gained more than 10%, I measured, within the last three trading days. Yes.
Yeah.
More than 10%. And, admittedly, a clearly bullish breakout here. I mean, this formation lower was, very well behaved. It was within a channel, and look what happened once we broke through the channel. I mean, that's a massive, explosive move higher, right?
Yes.
Just look at the daily RSI at 88.
Yeah, and the yuan is appreciating as well.
Plummeting. Yeah, the USD yuan. Yeah, the USD yuan is plummeting. Yes.
Plummeting. Yeah. And risk on, risk on, risk on. End of story. The other interesting thing was, you must have read a few days ago where the UK said, following the Hong Kong developments, they said, look, if Hong Kong residents want, they can get UK citizenship. Basically they opened the door to Hong Kong residents, and the Chinese today said, if you want to make an enemy, you're going to make an enemy here. So they're not playing the Chinese, and they're gonna how should I say, they're gonna try and take what is theirs. But the UK are maybe opening another front of uncertainty. So I don't know how that's going to pan out, but definitely something worth keeping an eye on. The pound is actually not doing much today. It is a little bit weaker against the euro, a little bit stronger than against the dollar, but really not doing that much. But like Blake said, Norway is doing really well. And, if you put things in perspective, I'm short Euro Norway, and I have been short from quite a bit below here, but I added quite a bit higher, above 11, what was it, 11.50, I think the highest short I had. And I've taken some profits on that. But, if you look at the long-term ranges of dollar Norway and Euro Norway, we're still really, really high. And
Oh yeah, absolutely.
if you consider the economy, the Norwegian economy, and how they're,
the NOK is still very cheap.
It's very cheap, yeah. And so, I'm going to keep that. And if we get a risk-off run, which means that the krona is going to sell off, I'm going to be buying more krona.
I'm still short.
Possibly.
Both Euro NOK and USD NOK, and I have no intention of letting them go. I mean, I see no reason.
Yeah, I agree with you. And what else is there to say? Not that much, really. Data, we had very little data today. Actually, we had UK construction PMI, which was, if you look at the jump in the number, it went down from the 50s or whatever, 45, 50, it went down to 28.9 amid the coronavirus crisis, and now went back to 55.3. So again, we have to remember how this is. It doesn't mean we're back to where we were in February. It just means
means that we're not contracting anymore.
Yes, exactly.
Yes.
Right. So that's good.
But as long as we're not expanding in all these indices that are counted with the midpoint being at 50, it means that we remain in the suppressed post, COVID crisis levels.
Yes, exactly. If you have one reading of 28 like we had, you need quite a few readings of above 50 to get back to where you were.
Back to where you were. Yes, exactly.
So
exactly like that.
We need to make sure we understand how the numbers are being calculated.
And it's index. I mean, there are indexes that have different methodology. So we need to know which one is what.
Absolutely. And we have what do we have today? We have ISM non-manufacturing PMI in the US expected 50.
Which is expected flat. Yeah. More or less at 50.1 to be exact. So
Yeah, and given how economies are opening up a little bit, it kind of makes sense to see.
Yeah, it might even be a bit.
Deteriorate. Yeah,
it might even be a bit.
Exactly. Yeah. So it makes sense. The question is what happens, 6 months from now. That's the big question. So we're gonna have to wait and see.
Indeed.
Otherwise, all very quiet. And do we have anything big this week? I can't remember. But we have the RBA tomorrow. So that might be interesting. That might give us a few pointers on what's happening, but nothing else data-wise.
Now the central bank game is whoever is not overly dovish is treated like they've been hawkish. So, if the RBA doesn't double down or whatever, perhaps also that is, the reason why we haven't even seen a bigger move out of this triangle here in the Aussie. The market is likely to be expecting, a signal from the RBA that, it's okay to keep appreciating from here. So, let's see how it goes. In any case, this is a bullish breakout from the recent consolidation, and, from a technical perspective, I think it clearly points out to the next upside target, which is this confluence of the 61.8% fib and this horizontal support resistance area 71.30 to 71.50. Quite a nice area of resistance. I don't really see any reason from a technical perspective why we won't make it up there. Kiwi has made the same type of move. Blake already showed the long-term trend line, which I also have it on the weekly. On the daily, the next upside target is at 67 cents. So, clearly, everything is obviously following, a very similar pattern to what we have in the Aussie, which is, the S&P, which is the risk barometer for the global risk barometer in essence. And the S&P broke out at the end of last week. On Wednesday, actually, it broke out. Then on Thursday, we stayed above it. Market was kind of undecided. But today, people seem to be more comfortable in jumping on the wagon and looking for more upside, which is extremely likely. The next upside target is at 32.60, and there is no technical reason to think that it's not going to happen. Nasdaq still overperforming with by hitting all-time highs again and again repeatedly. Now testing this ascending wedges resistance, we do see RSI divergence as well. We do have some more space though, because I do like this confluence of resistances just above 10,600. So I think it's probably going to be acting as a magnet. IWM clearly, not performing equally well, but still maintains this uptrend. The rest of the indices, some of them are mirroring, like the S&P, like the DAX, for example, is a good example. FTSE trying to do the same thing, although clearly having underperformed in the recent past the US indices. We already talked about the best performing index today and during the past 3 trading days, which has been the Shanghai Composite Index, more than 10% gain in 3 trading days. Quite a massive move to the upside. Here it is, vertical, really went vertical. Once it broke through this resistance, it really went vertical. So that's the name of the game, and there's no reason why somebody should fight it. Nikkei, by the way, seems to be lagging a little bit, but this also seems to be in a triangle that's very, very likely to be resolved with a break higher as well. So wherever you look, you see the same type of patterns, or the inverse type of patterns. Depends on if it's an instrument that's correlated to risk on or risk off. The DXY obviously, and it was inevitable, given that has broken through this corrective rebound. I mean, we kept saying that this rebound in the DXY looked clearly corrective. The only question that was to be answered, as I mentioned last week, is, could the DXY master, the strength to perhaps, push a little bit higher before rolling over, or would it just roll over from there? So now we do have the answer. Most probably we've broken through this trend line support from this channel. Triangle doesn't really matter, because how you want to draw it, because the trend line support will be the exact same one. So daily close below it, which is extremely likely, unless something unexpected happens or something unexpected comes through the wires within the day, will confirm that we've begun another leg lower. I don't really see any reason why we can't in this next move retest this 94.65 March low. It seems very, very likely that we will. So the path of least resistance in all instruments remains the one that points probably to more dollar weakness, more risk on, and don't try to just explain it by using logic, because that's not what works at the moment, and that's not what moves the market. What moves the market for the time being is liquidity and the reassurance. I mean, every single day you see more headlines coming out saying, you know, Trump is considering more fiscal stimulus, monetary authorities are considering more monetary stimulus in case of ABC. So it's not only what we're getting as we speak, it's also, you know, all the promises that, don't worry, you know, even if things roll over once again, we don't mind, we're going to throw at it, you know, as much more stimulus as needed. So, you know, it's all about not letting, you know, risk of take grasp of the markets. And the market so far is considering that enough of a promise. Also, you know, keeping in mind past, you know, performance. So, you know, until proven otherwise, that's going to be the path of least resistance. It's more than obvious. So, as long as they can print without repercussions, because as I've mentioned many times, in my opinion, this whole thing is going to end once the side effects of printing are now obvious to everybody that are worse to the alternative of not printing, right? We're not there yet, and it might take some time for us to be there yet. So, you know, for the time being, it is what it is. Let me go through some of your questions. I think we have more or less covered the main stuff. Euro pound is bullish. Sorry, your comment is a little bit confusing, but I'll definitely have a look at euro pound, and they'll tell you, first of all, that the euro pound found support at, you know, the area you would expect it to find support if it actually wanted to rebound. We talked about that. It was the confluence of the previous resistance area and this ascending channel trend line support. So far, so good. If you're bullish, the good news is that the uptrend has not broken yet. Now, that doesn't really change my mind that probably there is not an appealing risk reward in being long anymore. I mean, you know, you had multiple opportunities to do that at much better prices with, you know, much better expectations. Now, I'm not saying that it's impossible to even, you know, see a new high, and, you know, you need to respect, as long as we're holding this channel, the uptrend. But needless to say, I think it's rather late probably in buying euro pound here. I think it's probably likely that the next decent move is going to be to the downside. The uptrend, though, remains intact. So, you know, if you're long and you want to remain long or whatever, I mean, I definitely can't blame you, right? Somebody is asking about the CNH. We already mentioned that, but we didn't show the chart, so let me show you. Here's the USD CNH for its standards, because we know it's not a big mover since, you know, it moves around. It actually moves in a band that the PBOC puts in place every day. So for its standards, quite a big move lower with the Chinese yuan strengthening today. Out of this triangle, so, you know, I was expecting that, you know, whatever direction we broke from this triangle, we would see some continuation. As it seems, we broke the downside. So, you know, I think we're going to see some continuation from there. Keep in mind that, you know, if you look at the big picture says that we are in an uptrend, right? But in shorter time frames, if you look at them, you know, 4-hour chart, 1-hour chart, even on the daily, and you focus on the last part of it, I think that in the short to medium term, the path of least resistance, now that we broke through this, is lower, irrespective of the fact that the medium to long-term trend remains higher until proven otherwise. So that's my position about the USD CNH. And yes, we did also, as you mentioned, not only did we slice through the triangle trend line support, we also sliced through this horizontal support area and the 200 daily moving average. So yes, if confirmed on the daily close, which I think it's a very high probability that's going to happen, it's quite a nice bearish development, which, as I said, I think is going to bring more weakness in the USD CNH in the upcoming days. Okay, China 10-year yield popped up today, which brings global bond up in pulse. I'm not sure you would in plus. I'm not sure what you want to write there. You meant plus. China equity spike up after 3 shoulder candlestick. Yeah, in general, Chinese assets are flying, and they're showing like amazing risk appetite. No question about it. It's. Let's be honest. The name of the game now is who's gonna, inflate the biggest bubble. It's not about if we are in a bubble, it's about who's going to inflate the biggest one. And it's completely YOLO tactics, who cares about what happens tomorrow? Let's get this thing rolling, especially from the US side. We know that we have the upcoming elections. I personally can't think of any recent politician that wouldn't be solely focused on what's going to happen until the election date. So that's not like an attack on Trump, because I don't think that any of his predecessors would have done anything different, having to do with focusing on what will increase their chances of getting re-elected. That's the big problem in the vast majority of the economies as well. That politicians care mostly about the re-election than they care about what's the good for the economy, the people in the long term. But this is not something that you can fix or change overnight. I mean, that's what we have to deal with, and that's it. Could Q2 earnings drop equities? Listen, we now have the biggest gap between earnings expectations and actual stock prices and indices. So, if that wasn't enough to move equities to the downside, I don't think so. I mean, we've already seen this, which has been one of the strongest correlations, the strongest relationships we've had, earning expectations and stock prices. I mean, it has completely gone out of the window. So, there is no guarantee whatsoever. The market is now accepting the fact that, no matter what happens, stocks, will be moving higher. Of course, this is not going to end well. There's no question about it. But until something changes, the market is going to care less and less about anything that made it care until 4 months ago. That's it. Hi, Steve, what do you think about USD Swiss? What I think about USD Swiss is that USD Swiss has broken to the downside from this triangle, and that's a bearish development, which is the exact opposite of what the Euro USD has done, because we know that the inverse relationship between the Euro USD and USD Swiss is quite strong. So, I think that there is a very high probability that we're going to see continuation in both cases. We're going to see the USD Swiss continuing lower, and we're going to see the Euro USD continuing higher. IBXC, gold, silver, platinum. Gold, silver, and platinum. So, gold. Nothing really I can add here. I mean, gold consolidate. I mean, gold can't even pull back anymore. You get some potential big down days, and by the point that in the middle of the day you have a candlestick that looks very ugly, buyers step in, and the gold might close unchanged, or by leaving behind like a spinning top, which is an indecision candlestick, and then it moves forward. So gold almost tagged last week my first upside target since we broke through the triangle, which was 1791. We almost made it there. Then if, or most probably when we slice through that, I'm looking at the confluence of resistances at 1823, 1824. So that's my next upside target, and I really see no reason why you would want to fade this move. I mean, dollar is weaker. The environment is the best environment you could even imagine ever, having to do with monetary metals. I mean, it's extremely supportive of monetary metals. So, I mean, I can find no argument why somebody would want to be short, really. And here is silver. Silver has broken through the symmetrical triangle as well, had a couple of days of weakness, back testing in essence the breakout trend line, and it seems to be appreciating once again today. I don't really see much of a resistance until almost $19, so it is what it is. We also had another friend asking for natural gas. Listen, natural gas is doing fine. It rebounded from the pivot area that we had talked about many times in the past. It's now back again in the middle of this rectangle. So from a risk reward perspective, now that we're back in the middle of this rectangle, there's clearly not much you can do about it. I mean, it doesn't make much sense buying it, doesn't make much sense selling it, because the best you can wish for is a 1-to-1 risk reward ratio. So you bought it near the lows, excellent, well done. You don't have the position, you have two choices. Wait for it once again to either test your resistance or support so you can fade it, hoping that it's going to remain in the rectangle, or wait for a breakout from the rectangle, in which case you can then participate in the direction of the breakout. Personally, my personal plan about natural gas is buying it once it confirms a breakout from this rectangle. I don't want to be short even if it breaks through support, because I think that the move to the downside might be very, very short-lived. I'm not really interested in playing the range. So the only attractive, according to me, right? I mean, for my taste, potential here is buying a breakout above 205. So that's the only way I'm interested in playing it. But everybody has their different styles, so I'm just Steve, do you think that the distraction of the dollar by the Fed will eventually cause the markets to drop as investors lose confidence in the US currency? Short question. Your question continues, but let me answer very quickly in the first part of the question. Not necessarily. Usually when what you describe happens, what we get is massive rallies in nominal prices, but not big enough to make up for the loss from the currency side. So partially you are right, meaning foreign investors are probably going to lose their confidence, because if they see that there is a high chance that they're going to be losing their profits by the currency devaluation, they're going to be less and less interested. Needless to say that if something like that happens, the US bond market is going to seize completely, because you understand, with ridiculous yields like the ones that we currently have globally, I mean, who is the foreign investor that's going to be buying treasuries, for example, to make a negligible return for a long period of time, holding it for a long period of time, when they can lose what they can make within 10 years within literally a couple of days of dollar depreciation. So the first thing that's going to happen, of course, is that the bond market is going to go completely out of bid, and the Fed is going to be the only buyer left in the market. So it's going to own completely whatever comes out from the treasury, whatever issuance comes out. They'll have to buy 100.0% of it. End of story. And then yes, foreign investors are going to start losing their interest in buying US stocks if they're afraid that the currency depreciation is not going to make up for the nominal gains. Now, US investors are going to be more or less, remain invested, and the stock market in nominal terms are going to be doing great. Is going to be doing great, but not in real terms. I mean, if you look at Venezuelan stock market, for example, it went vertical, but the value of the currency, I mean, went to the trash can. So now, is that easy to happen with the US as long as the dollar is the world reserve currency? No, not at all. I mean, it's not easy to see such a move in the dollar. I do think that the dollar is going to depreciate a lot, but I don't think it's going to be happening probably in a disorderly manner. I mean, it's going to be quite strong, but it's not going to be in a way that people are going to be, running out of the doors like, the building caught on fire or something. So, that's what I believe. Now, the second part of your question is, since the dollar is doomed to go much lower, as the US has proven to be the biggest currency manipulator the world has seen. Yeah, I agree with you. The question is when. For the time being, it's doing okay. I mean, it has been moving lower, and I think it will continue to move lower. But the move is, very, very orderly so far, and I would say rather slow. I don't think we have any more time to cover questions. I almost heard the guitar there. Am I right?
Yeah, you missed it, huh?
Yeah, I did. I did.
All
I
right.
did miss it. I
Yeah,
mean,
shy.
I had to go solo every day. Day you owe me.
All right, buddy. I know. I owe you plenty.
So we have
Anyway,
Tracy with us today, right?
yeah. Tracy's here.
Okay. It's gonna be nice hearing her voice.
Okay. So, Tracy, welcome back. I'm going to get you set up now as a panelist, and wait for you to pop up here. And I'm asking you to unmute. Welcome back, my trading warrior sister.
Hello, how are you guys?
Good.
Good to be back.
We're good.
Hello.
And what a great day to have you.
Yeah, definitely.
So you don't share a screen, so I'll share mine, right?
Yes, correct.
Okay, and we just go through we'll cover the board together, Tracy. Appreciate you being here. So I'm gonna share my screen. Why don't we start off with WTI, Trace? I'm taking a shot here. I thought that with the SPOOs up 54 handles, that so far the response in WTI has been kind of muted. What are you thinking here in the energy patch?
Yeah, absolutely. I mean, I think we're looking a little bit stretched here, and kind of, as you said, the market reaction, we haven't really gone up as much as the SPOO has, and that's partly for fundamental reasons. Refining margins are so poor right now that it's kind of keeping a cap really on WTI. I mean, if you've noticed, we've kind of been in that, like
$3 range.
like that $3 range for a while, which is good actually, because I mean, OPEC basically wanted to stabilize the oil market, and they kind of have. But just the fundamentals.
Was it OPEC or the Fed, Trace? That stabilized the.
I pick one. I don't know.
All right. Maybe
but
both.
Yeah, so I mean, right now I think I think we're just in consolidation mode. I don't foresee anything really right now that's going to cause a major spike in oil prices. Looking out to the future, I do see, because of all the capex cuts, and this is kind of more of on a macro level, because of all the capex cuts and consolidations and bankruptcies, I definitely think we see an inflationary oil spike, but that's not out until 2021. In the meantime, I think, right now, really we're just in consolidation zone, and I don't really see big catalyst for any kind of big move up to the upside right now, as it stands right now.
I kind of have a level I'm eyeballing down around the $30 to $28 level, based upon the kind of rally that we had in the first bounce before we went negative. Is that a little aggressive for a narrative to maybe see a $10 break in gold, in oil?
I mean, just because of everything so buoyed right now by the Fed and everything, that it's possible. I mean, I thought we would see a bigger pullback already, but we'll possibly see that heading into the fall, where it's typically a softer market anyway for the oil industry. But I definitely can see 30, 35 is definitely possible.
Okay. Appreciate that view. And anything fundamentally China-wise, China's their equity market's exploding. So
Yeah, I guess
it's probably
apparently Nomura put out a note yesterday, I guess during their whatever, that basically said, get out of U.S. equities and get into Chinese equities because of the unrest and the virus and everything going on in the U.S. So I guess they're flipping all their customers over to Chinese stocks.
Yeah, U.S. becoming a pariah makes your move to Canada look prescient. So I wish I was up there with you and I saw that beautiful picture. Yeah, just keep a room open for me, okay? And
You got it.
all right. And you know, I want to congratulate you. I want to go to the dollar index now. And you know, what's great about Twitter is you really make you have some great relationships, and when people see you commenting on something, they actually provide input. And you did down here, Trace, if you see my screen. You were talking about 96 and then 95.60, and that was a great call. That was a low of the dollar. I know that you're dollar bull or at least a euro bear. This
Right.
action today, does it? What's going to flip you from being a euro bear to a euro bull? Do you need 114 or what are you thinking here?
I mean, it's not really a technical level. I'm actually looking at more fundamental levels, you know, and something to keep an eye on is, you know, I guess it's what, the 17th and 18th, they have their meeting on, the EU has their meeting on, you know, on this stimulus bill. You know, that's something I'm watching. Obviously, if that passes and it looks good, that will be bullish for the euro. But if it doesn't, that's pretty bearish. But my view on that is more macro view. So, you know, this pullback in the dollar does not change my views at this point.
Okay. All right. So kind of when you have a fundamental view, do you have levels that you might be interested in building a short position in euro then, or you're just going to wait for the meeting, see what the ECB does mid-month?
I'm just going to wait for the meeting. And actually, I've actually been in dollar index futures.
Okay.
EXF. I haven't really been in the euro lately, although I mean, I switch back and forth, but lately I've just been in dollar futures.
Okay. So I was kind of thinking, I don't know about you, but you know, the weak dollar has been constructive, or at least for risk. And you know, now that I'm looking at S&Ps up here, I don't know if you wanted to comment on it, but you know, we all know what the NASDAQ did, right? It's been a moonshot, it's parabolic, it's at new highs, but it took all of that strength in NASDAQ for us finally to take out the high, the June 20th high in S&Ps. I'm wondering if you're just as amazed as a lot of people who thought after the COVID crash that we'd have fib retracements and then pull back, and you know, we're not that far away from the recent recovery high of 32.20. Any view on what's happening in the equity market?
I mean, I think NASDAQ is crazy. I'm not gonna lie. I mean, really, but it's, you know, it's all of about six stocks that are keeping it, you know, at a slingshot, which is, you know, just because their market cap is so big and because they're weighted so heavily in
like
that
this
index.
Like Amazon, you know, everyone buying things online, Amazon making new highs.
You know, Google, Microsoft, Apple.
You know, Apple has kind of shifted from being the strongest technically to being the weakest technically. Just something I'm seeing with new highs, if we make new highs that we're not confirming on a lot of time frames. But so basically it's a stand aside for you. Do you have a view on equities similar to crude? Maybe it waits till the fall to correct.
Yeah, I think maybe closer to the election fears, you know, that come in. And if you kind of look at the VIX curve, you'll kind of see a kink in November. So I think that, you know, I think that's going to be kind of a contentious time for volatility and for stocks as kind of we get closer to closer to the election.
What are people thinking up there across the border about U.S. elections? What's the talk possible? I mean, the polls are favoring Biden, but who knows?
I mean, you know, I think everybody here just stands back and just watches.
Are you guys amazed at how the U.S. has mismanaged the COVID problem here? Because you guys up in Canada have it pretty much well contained compared to us, right?
Yeah. I mean, Quebec was the hardest hit, but nothing close to.
Are you guys wearing masks up there?
Actually, we don't. It's not mandatory. No, most people don't.
Okay. Yeah. So, and can U.S. citizens, are we barred from your country like we are from Europe and other places?
Yes, the border is closed so far.
Okay. Well, I have to cancel our date then Friday. I can't get there, Tracy. It's not my fault. It's yours. It's Trudeau's.
I know the border. They just extended the border closed down till the end of July. So we'll see how that goes.
Oh, okay. Well, we'll have to reschedule. God, I was so looking forward to it. And I want to, I know, are you looking at crypto? Do you pay attention to crypto at all, Trace?
I really don't.
That's okay.
I feel like everybody is. I'm late to the game. I probably should look into it more. I haven't.
Any view on your? Yeah, I know. You know, I can trade it because a chart is a chart, but when I try and understand blockchain, I'm a blockhead. So, you know, it's hard for me to own anything that I really don't understand. Right. You have a view on your local currency, Canada, with what's happening in energy. Does it still look negative to you?
So
USD?
Yeah, I obviously, you know, oil, you know, up at 40 still is, you know, helping keep a bid on CAD. Same with gold, right? Because it's kind of a commodity currency. We have a lot of mining here.
Right.
So that currently is helping keep a bid and you know, a little bit of dollar weakness. But bigger picture, you know, if things don't change fundamentally, I think that will still present weakness for CAD.
And gold, you know, some Ellioticians are saying that we're entering a ending diagonal, which, you know, the key word in here is ending. Do you think that the precious metal trade is too crowded, that, you know, could be vulnerable, especially since you are looking for a stronger dollar down the line? Do you think a stronger dollar is going to cap this precious metal advance? Do you think that'll be the catalyst?
You know, I don't think that's necessarily true. I mean, only because of all the uncertainty right now. So even you have, you know, indices bid, and even when we had, you know, even when dollar was, you know, just had that recent leg up to what 97.8 or whatever it was. I mean, gold stayed pretty well bid because I think right now it's a you know, flight to safety trade. It's a totally different kind of trade. You have so much uncertainty in the world right now that I don't think it's being as affected. You know, I don't think it's having the same correlation that it used to have, right?
You know, something I've noticed, I'm sure you have too, is that the market has become so binary. Here's S&Ps, up. Here's oil, up. Here's gold, up. So, you know, it's almost like everything is going up together. The only difference is magnitude. Have you ever seen a market where there's so little differentiation between different asset classes that they're all inflating or deflating together?
No, it's crazy. And it's, you know, and I think partially because of, you know, what the Fed is doing, because of so much liquidity that's sloshing around, and literally everything's bid. I mean,
okay.
You know,
you know, China, Nomura came out and said buy China today.
right.
And, you know, I'm always interested in how people from other countries view what we're doing. And the rhetoric around China has been pretty intense coming from the U.S., you know, with the new law in Hong Kong, and even before that, with sanctions being put on people, and guys like Peter Navarro saying that COVID was weaponized and China sent agents in here to infect Americans. If there's anything that I worry about on the election is where we're headed with China. I mean, we've been in a Cold War, but it seems like I hear drumbeats that worry me. What are people saying about the U.S. and China? And is Canada drifting the same way that a lot of the U.S. old allies are drifting more towards alliance and connections with China than with the U.S.?
Well, China has its own problems with Canada and vice versa, right? We've got Meng, Hawaii, right? We're about to extradite her. They've got two of Canada's journalists locked up. Now they just both issued travel warnings against their countries. China's kind of, to me, it's very strange because China's lashing out everywhere right now to everybody, Australia, Canada, not the US so much, believe it or not, but which is kind of unlike, and they have 22 land disputes going on with 22 different countries. It seems right now that they're lashing out at a bunch of countries, which seems uncharacteristic of them, right? They usually play the long game. They're slow moving. They don't, usually react too quickly. So this is, I think we're kind of seeing kind of a change here, within China and how they're reacting to situations, and where that leads, I'm not sure. I've heard there's dissent within the party. I've heard a lot of things about it, but it's just something to keep an eye on because it's definitely uncharacteristic of that country.
Okay, interesting that it is. And I didn't know about the situations with journalists from your country also being jailed by them. Was there anything else that you and I didn't touch upon asset class wise that you would like to comment on?
No, I mean, I guess, we could talk about grains here. If you look
soybeans
are surging this morning. I don't know, like we're supposed to have a 100-degree plus weather in the plains for the next 2 weeks, right after we just had floods all during the spring. So that's maybe, something to watch, or perhaps a trade idea.
You can't eat gold.
In the grain complex.
And soybeans are called protein gold. So the color of it, and that would kind of line up with everything that's going on. Pandemic, famine next, some type of grain problem.
Why not?
Yeah, because China's having trouble with their crop and their wheat crop. They have some type of army worm or something. So, and I, it's great you brought up the grains. They're very good technical markets. I used to trade them a lot. Do you trade them?
Occasionally, yes. I usually trade the corn market if I'm going to trade any grain.
Okay, all right. So grains look good to Tracy, and we could have some type of pullback, and you maintain your bullish stance on the dollar, but you really don't have any levels. You're going to wait for the ECB meeting mid-month to make any decisions on that.
Right, exactly. I mean, right now I'm just saying, right now I'm actually not in any currency market at the current time. I'm just kind of,
and as we talk, my crude position's working. You see, you brought me some good luck today. To me, it looks like, Trace, we have kind of a rising wedge here. Mm-hmm. And the rule on wedges is, I think we could fail, especially if we get any risk off in the market, to back to these levels. Don't you think 34 is realistic, the bottom of the range?
I mean, really, I think really right now, the 37s are where it's going to get sticky, but if we get below that, then
that's right here.
Then definitely. So I'd watch that 37 area. If we can get below that, then I definitely think we could continue on into the lower 30s.
Okay, and I'm going to pull up your website, shygirl.com. It kind of looks like a little bit of a blog spot, and you do some writing here. Okay.
Occasionally, I haven't
yeah.
kept it up, so you know.
Okay. You're too busy on Twitter and trading, right?
Yeah, I mean, I
Okay.
haven't, you know, I don't know. I haven't kept it up. I usually do if like something, you know, big happens, but
Okay. All right. Well, get to it. We need you out there. There's so
all right,
much
all right.
baloney out there that, you know, we need an educated eye, especially in these times. And I want to thank you for being with us today, Tracy. I recommend that everyone becomes a follower of yours, and it's at Shy GRL. And you could follow Tracy on Twitter, and she covers the gamut. You know, you're commenting on things. I really enjoy your feed and appreciate you and you coming here, and thank you for letting me pick your brain and edify our community today, Tracy.
Absolutely, it's always a pleasure. I
All right.
love talking to you guys.
Good hunting, Trace.
All right,
And
thanks.
we'll get something going in the fall, all right?
Perfect.
All right, everyone, Tracy Schubert, and you could follow her at Shy Girl on Twitter. And that's going to be a wrap for us, everyone. We'll see you all back tomorrow for Turnaround Tuesday. And I want to thank everyone for being with us. Remember, don't just count your pips, count your blessings. And let me just look for the place to end the meeting. All right. So that's going to be a wrap. Pause recording. Okay, everyone, have a great day. We'll see you tomorrow for Turnaround Tuesday.